If you are over 65 and you own your home, I want you to go find your property tax bill after this video because there is a very good chance, better than half in most counties, that the number printed on it is wrong. Not wrong because somebody made a mistake. Wrong because it was calculated as if you were 40 years old. There is a one-page form sitting in a filing cabinet at your county assessor's office right now with your name on it, figuratively speaking. And that one page can knock hundreds, in many cases thousands of dollars a year off that bill for the rest of your life. The county knows exactly how old you are. They have your birth date on file. They print the full bill anyway, every single year. They mail it to your house, and they wait. And here is the part I need you to understand before we go one step further. They are allowed to do that. Nobody is breaking any law by overcharging you. The law only works when you invoke it. And today, I'm going to show you exactly how. My name is Harold Briggs. I spent 43 years inside the same small-town bank in Ohio, from teller to branch manager. And in all those years, do you know what crossed my counter more than any other single bill? Property tax payments, twice a year. Like clockwork, I watched half the retired people in my town slide their property tax money across that counter. And I knew, because bankers see the paperwork, which of them were paying full price when they didn't have to. Bank policy said it wasn't my place to say anything. Well, I'm retired now. It is absolutely my place. So here is my promise for the next 20 minutes. I'm going to walk you through 5 separate property tax breaks that exist for people your age. And I want you to hear that word 5, because most folks who think they're covered know about exactly one of them. These breaks stack, one on top of the other, like firewood. I'll give you the exact sentence to say on the phone to your assessor's office, word for word, so you don't have to know any law at all. And number 2 on this list is the most valuable thing I will say all week. It's the one that can freeze part of your bill in place while your neighbor's climbs every year. And I am not going to make you wait until the end for it. Stay with me. Now, 2 thoughts are probably forming right now, and I want to knock both of them down before they cost you money. Thought number 1, Harold, my house is paid off. I'm done with all that. No, you're not, and I say that with love. The mortgage ends. Property tax never ends. It is the one housing bill you will pay until the day you leave that house, which makes it the most valuable bill in your life to shrink. Thought number 2, we already get a senior discount on our taxes, so we're all set. That one is expensive too, because in most counties, getting one break tells you nothing about the other 4. The homestead exemption doesn't automatically bring the freeze. The freeze doesn't automatically bring the credit. Every layer has its own form. And one more thing, and this matters. If you rent, don't you dare click away. Number 5 on this list is partly about you, because a number of states quietly send renters money back through the same system, on the theory that your rent has been carrying your landlord's property tax all along. Almost nobody knows that program exists. We'll get there. But first, here is the one idea that makes everything else today make sense. Your property tax bill is not one number. It looks like one number, sitting there in bold print, but it is actually the end of a calculation. The county takes what they say your home is worth. They subtract any exemptions on file, and they multiply what's left by the local rate, which means there are levers inside that calculation, and every single lever has a form, and every form sits there doing absolutely nothing until you file it. Being eligible and being enrolled are 2 completely different things. The law does not lower your bill. You lower your bill. So, break number 1, the foundation layer, the homestead exemption. This is the most common property tax break in America, and it is astonishing how many people have never filed it. The idea is simple. If you own the home and you actually live in it, it's your homestead, not a rental, not an investment. The county knocks a chunk of the home's value off the books before calculating anything. Depending on your state, that chunk can be modest or it can be substantial. And in a number of states, the amount gets bigger, sometimes much bigger, once you're past 65. Here is where people get caught. Most counties do not apply this automatically. You bought the house 30 years ago. Nobody handed you a form at the closing table, and the subject never came up again. I watched this exact thing across my counter for 4 decades. A man would tell me proudly that he'd never missed a tax payment in his life, and I'd be looking at a bill that was hundreds of dollars higher than it needed to be, every year going back decades. Never missing a payment is not the same as never overpaying. So this is your first phone call. The number is printed right on your property tax bill. You call the assessor's office and you ask one question: is a homestead exemption on file for my property? And if not, can you mail me the form? 10 seconds of courage. That's all it costs. And while I have you here, ask them one more thing, because a fair number of counties will do something almost nobody believes until they see it. If you were eligible in past years and never filed, some counties will correct previous years and send money back. Not all of them. But you will never know unless you ask. And the asking is free. Now, break number 2, the one I promised you, the assessment freeze. Listen to me carefully, because in the states and counties that offer this, it is the most valuable piece of paper a homeowner your age can file. Here's how it works. Your property tax is based on what the county says your home is worth, and as home values have climbed these past years, that assessed value climbs with them, which means your bill climbs even though your income stopped climbing the day you retired. That is the quiet squeeze pushing seniors out of homes they paid off years ago. The freeze stops it. In the places that offer it, once you qualify, usually by age, sometimes with an income limit, the assessed value of your home gets locked, frozen in place, as of that year. The market can do whatever it wants after that. Your neighbor's assessment climbs every year, and every year his bill follows it up. Yours doesn't. Now stretch that over a retirement. 10 years, 15 years, 20 years in that house. The gap between his bill and your bill gets wider every single year. And by the end, that one page you filed can easily be worth more than everything else in this video combined. And here is the brutal part. The freeze is the least known layer of all of them, precisely because it's the most valuable. Nobody mails you a birthday card at 65 saying, "Congratulations, come freeze your assessment." The year you qualify and don't file, you don't get a warning letter. Nothing happens at all. That is exactly what makes it dangerous. The mistake leaves no trace. Your bill just keeps quietly climbing, a little every year, and it never once occurs to you that it didn't have to. Let me put a number on it, just to make it concrete. And understand, this is an illustration. Your numbers will be your own. Say 2 identical houses sit side by side, and assessments in that county drift up a few percent a year, which has been a slow year lately. After 1 year, the difference between the frozen bill and the unfrozen bill is small, maybe the cost of a tank of gas. After 5 years, it's a monthly grocery run. After 15 years, the man without the freeze is paying hundreds upon hundreds more every single year than the woman next door who filed 1 page back when she qualified. And the gap never stops widening. That is what compounding does when it's working against you. My whole career was teaching people to put compounding on their side of the table. This form does exactly that. So when you make that call to the assessor, here is the full sentence I want you to say, and I'd write this one down. What property tax exemptions, senior discounts, or assessment freezes am I eligible for at my age, and can you mail me the forms for all of them? All of them. Those 3 words matter, because clerks answer the question you ask, not the question you should have asked. If that freeze alone was worth your 20 minutes today, do me one small favor. Hit the like button, not for my sake, but because it genuinely pushes this video in front of the next homeowner over 65 who has never heard the word freeze in her life. And subscribe, because I'm building state-by-state videos on exactly these programs, and I'd hate for you to miss yours. Alright, break number 3, the senior exemption itself. Now you might be thinking, Harold, isn't that what we just covered? No, and this is exactly the confusion that costs people money. In many states, the senior exemption is a separate, additional layer that sits on top of the basic homestead exemption. Same house, same owner, 2 different forms. The homestead break is for living in your home. The senior break is for your age, and sometimes for your income. And it subtracts its own additional slice of value before your bill is figured. Some places handle it instead as a straight discount or a credit on the bill. The label varies, the mechanics vary, and honestly, you don't need to memorize any of it, because the sentence I gave you sweeps all of it up. What I do need you to know is this: when the clerk says yes, you already have your homestead exemption. That is not the finish line. The follow-up question is, and is the senior exemption also on file? I'll tell you a small story here. There was a couple in my town. I did their banking for 20 years. Careful people. When he turned 65, they filed the form the county clerk handed him, felt very responsible about it, and never thought about it again. 11 years later, his son, going through their papers, found out there had been a second form the whole time. 11 years of a discount they qualified for on day 1, gone, because they asked once and the answer sounded complete. The county owed them nothing, legally speaking. Nobody lied to them. Nobody told them either. That's the whole game. Nobody has to tell you. Break number 4. And this one I want to introduce a little differently, because it isn't for everyone, but for the folks it fits. It changes lives. Property tax deferral. A number of states will let a homeowner past a certain age simply postpone paying property taxes, partially or entirely, for as long as they stay in the home. The unpaid amount sits as a lien, usually with modest interest, and it gets settled later, typically when the house is eventually sold or from the estate. Now, I spent 43 years in banking, so let me say this plainly. A deferral is not free money. It's a tool. And like any tool, it's wonderful in the right hands and wrong in others. Who is it right for? The person the industry politely calls house rich and cash poor. If you're sitting in a home worth several $100,000, but the monthly checks are tight enough that the tax bill hurts, that is exactly the squeeze this was designed for. And I will tell you something else. Wealthy families use deferral strategies on purpose, with their accountants nodding along, because keeping cash available today is worth something. Meanwhile, the modest widow, who actually needs it, has never heard of it, and if she has, she's been made to feel it would be shameful, like leaving a debt behind. There is nothing shameful about using a program the law built for you. Your home has been quietly working for you for 40 years. This is one of the ways it pays you back. If money is tight and the tax bill is the thing that stings twice a year, ask your assessor whether your state offers senior property tax deferral. Just ask. Knowing costs nothing, and you can always say no. And break number 5, the one for everybody, including the renters I told to stay. Circuit breaker programs, and yes, that's really what they're called, named after the switch in your fuse box, because they do the same job. They trip when the load gets too high. The idea is this. When your property tax, or in some states the portion of your rent that effectively covers your landlord's property tax, rises above a certain share of your income, the state steps in and sends part of it back to you, as a credit or an honest-to-goodness refund check. Hear that again if you rent. Several states will send renters money back, on the reasoning that you've been paying property tax all along, just with your landlord's name on the envelope. Now here is where almost everybody gets caught. These programs usually don't run through the county assessor at all. Many of them run through your state tax return, some through a separate application with its own deadline, which means the assessor's clerk can truthfully answer every question I've given you today and never once mention this. Different building, different form, different phone number. And because so many retirees stop filing state returns, or file the shortest form possible, the credit simply never gets claimed. The money sits in the state's account instead of yours, year after year, and no statement ever shows you what you left behind. The search words are property tax circuit breaker, or property tax credit for seniors, plus your state's name. Or ask the free tax help folks I'll point you to in a minute, because claiming these is their bread and butter. One more thing before the special cases, because somebody watching is already ahead of me, thinking, Harold, what if the problem isn't the exemptions? What if the county simply says my house is worth more than it's worth? Good. That's the right question, and it has an answer. You are allowed to appeal your assessment. Every county has a process for it. There's a window each year, usually printed right on the assessment notice, and it costs little or nothing to use. And before you say that sounds like lawyer business, listen. Most successful appeals from regular homeowners are not clever arguments. They are simple facts. The county's record says 4 bedrooms and you have 3. The record says a finished basement you don't have. The comparable houses on your street sold for meaningfully less than your assessed number. You gather a few pieces of paper, you fill in the county's own form, and a good number of those appeals succeed, quietly, every year. The people who file them are disproportionately the wealthy, not because the process is hard, but because they're the ones who were told it exists. Now you've been told too. Check the record card the county keeps on your house. They'll show it to you. It's public. And if what's written there isn't your house, say so. Now, before we land this, 3 quick ones for specific situations. Because for the right person, each of these outweighs everything else I've said. First, veterans. If you served, and especially if you carry any service-connected disability rating, most states stack an additional property tax exemption on top of everything we've covered. And at higher disability ratings, a number of states waive the property tax entirely. Entirely. If there's a veteran in your house, that word needs to be in your phone call. Second, disability more broadly. Many senior exemptions have a twin version for homeowners with disabilities, sometimes with no age requirement at all. So a younger spouse with a disability may qualify your household sooner than you think. And third, and please hear this one, surviving spouses. In many places, the exemptions and freezes a husband or wife had can carry over to the survivor, but only if the survivor refiles in their own name. Grief buries paperwork. I watched it happen to people I'd known my whole career. The county will not send a reminder, and the old exemption can quietly fall off the account exactly when the household can least afford it. If you've lost your spouse, or you're helping someone who has, put that call near the top of the list. Let me make all of this real. There was a woman, I'll call her Dorothy, 78 years old, a widow in Dayton, living in the house she and her husband bought in 1979, paid off for 20 years. When her daughter finally sat down with her papers, here's what they found. The homestead exemption had lapsed when the house was retitled after her husband passed, 9 years earlier. No senior exemption on file, ever. No freeze, in a county that offered one. She'd been paying, by her daughter's math, well over $1,000 a year more than she owed, for 9 years, on a fixed income, while cutting her grocery list to make it work. 2 phone calls, 3 forms, 1 afternoon of her daughter's time. The county even corrected a portion of the past years, because the daughter asked, out loud, whether they would. Dorothy's life didn't change in any way you could see from the street. Same house, same routine, except that from that year on, the money stayed home. And when her daughter told me about it, she said the part that stuck with her was her mother's face when she understood that it had always been legal, all 9 years, for the county to keep cashing those checks. Nobody cheated Dorothy. The system just let her cheat herself, quietly, the way it's letting a few million other people do the very same thing this year. So here is your week. None of this costs $1, and none of it requires you to know a single thing about tax law. Monday, find your property tax bill and call the assessor's number printed on it. Say the sentence, what property tax exemptions, senior discounts, or assessment freezes am I eligible for at my age, and can you mail me the forms for all of them? Then ask the 2 follow-ups. Is my homestead exemption currently on file? And if I was eligible in past years, can any of it be corrected retroactively? Tuesday, if you're a veteran, a homeowner with a disability, or a surviving spouse, make the same call with that word in your first sentence. Wednesday, look up your state's circuit breaker or property tax credit. Remember, that one may live on your state tax return, not at the county. And before tax season, get free help from AARP Tax Aid, or the IRS program called Tax Counseling for the Elderly. Volunteers trained on senior returns who file these credits every single day. Thursday, ask the county to see your property record card and check it against the house you actually live in. Rooms, square footage, condition. If it's wrong, ask how to appeal and mark the deadline on your calendar the moment they tell you. Write the calls down. Put the list by the phone. Do it with your morning coffee, 1 call a day. And by Friday, you'll know more about your own property tax than most people learn in a lifetime of paying it. 1 week of 10-minute phone calls in exchange for money that comes back every year for as long as you live in that house. And do one thing for somebody else. You know a homeowner over 65, a neighbor, a sister, an old friend from church who has never heard the word freeze in her life. Send her this video today, because the difference between knowing and not knowing is real money every single month, and no official letter is ever coming to tell her. Then leave me a comment and tell me what state you're in. These 5 breaks change shape at every state line, and I read every single comment to decide which states I cover first. And subscribe, because next time I'm opening up the phone bill, and I'm going to show you the 5 charges on it that a man my age has no business paying, including one that about half of you are paying right now, without knowing what it even is. Everything I've shared today is general educational information, not personal legal, tax, or financial advice. Every program I've mentioned has rules that vary by state, by county, and by income, and they change over time. So before you act, confirm the details with your assessor's office, your state, or a licensed professional. That's not me covering myself. That's just sound banking. Look after your money. You earned it twice. Once when you worked for it, and once when you kept it. I'll see you in the next one.